Simon?
Hey Scott, what are you eating? I caught you in the middle of it.
Caught me right in the middle of a bite, Dave. Yeah, perfect.
You're standing up and eating.
Sorry, dude.
Exactly what I'm doing. Literally standing up and eating. Yep.
Yeah.
Sounds like a peanut butter sandwich.
It's turkey.
Yeah. So I think the trying to combine a bunch of those thoughts together. So in every cycle I've been through, and I see Bitcoin as a 14-year bull market, and in every cycle we see a halving, a regulatory crackdown, all new all-time highs, and some higher lows on what people call a bear market. If you look at these longer charts, you just see that every time. But every cycle is dominated by, I'd say, one key feature of why Bitcoin should die. And in the first cycle, it was, Satoshi Nakamoto mining a bunch of Bitcoin, accumulating 1 million Bitcoins, and proving, trying to prove that everyone can mine from a computer and then mine from GPUs. And then specialist equipment came out, and then we had ASICs. And the whole thought experiment was, can Bitcoin be decentralized and work without a government and be independent of banks? Check. It won that, and it got through that, and it should never have survived that. Then the second cycle was all about, well, governments can shut it down. Can it be 51% attacked? Can quantum computers come along and take it down? Will all governments ban it? And so, 70% of all tradable Bitcoin ended up on Mt. Gox. Mt. Gox blew up. Everyone lost 90% of their Bitcoin. We had FinCEN say that you need to register as a money transmitter if you're providing an exchange. We had the Japanese authorities, crack down on all of the exchanges. We had Eric Voorhees try and raise money for Satoshi Dice and Bitcoin, and the SEC saying that's an unregistered security. You need to unwind what was actually a really profitable investment for investors. And so the second cycle survived. When governments could have shut it down, they should have shut it down then. For whatever reason, they didn't. And Bitcoin survived like the second. The third cycle was, is there really 21 million Bitcoins? Maybe we can fork this thing. Maybe we can create 42 million Bitcoin. Maybe Bitcoin is not Bitcoin. Maybe we need to create a new blockchain. Maybe some of these alternative things are actually going to flippen, and we're going to have a flippening. And maybe everyone needs their own token. Maybe we need a currency for everyone and everything and everyone. And maybe Bitcoin's not even Bitcoin, it's a blockchain. And so banks tried to create the technology and eliminate Bitcoin, and all the technology just didn't get anywhere, and Bitcoin just survived. So we then check the third cycle. It can survive money printing. We can have every single person in the world creating an illegal security, trying to copy Bitcoin, and no one can create Bitcoin, and there's still only 21 million of them. Most of them get mined, so we're at about 18.5 million, and we've only got a few of them left, and institutional mining and security and hash rate that goes up. And then everyone says, Bitcoin's going to die this time because it's only been alive in the post-financial crisis. And in the post-financial crisis, we started quantitative easing, and now we're heading into a first recession, and the print is going to come off, and there's going to be quantitative tightening. The Fed's actually going to reduce their balance sheet, and they're going to hike interest rates. And so that causes the next crash. And it turns out that the Fed can't do quantitative tightening because it destroys the whole economy and it destroys the banking system. And everybody learns that actually Bitcoin is simply a way of owning your own money, spending your own money, and having a monetary policy that's 100% forecastable into the future. And so this cycle is all about, can we get to the 2024 halving and survive quantitative tightening? I think we're going to check that box too.
Yeah, Simon, it's really interesting because I think that this time you didn't hear, to your point, in the previous cycles, it was Bitcoin will die, Bitcoin will die, Bitcoin will go to zero. I didn't hear that in this cycle. right?
Yeah, I think everyone. I heard a big narrative. I mean, a lot more and more people in each cycle. There's more and more people that come across to realizing I need to allocate some of my portfolio to Bitcoin. And so this one was heavily institutionalized. It was heavily, the corporate narratives from Michael Saylor joining and public companies and various other things. BlackRock entering the equation. All of the institutions saying, right, let's get rid of all the fraudsters that don't comply with regulations and we'll take over. We'll have an Operation Choke Point. And then eventually some of the big boys in America will come and do this thing properly. That's the current narrative and tightening and various other things. So it's about, I guess, the large traditional takeover in America would be the existing narrative. But there's a ginormous world that still needs Bitcoin. So after the next halving, you'll enter the next narrative, which has started already now, which is what if governments need to backstop their entire banking system and large institutions gobble up smaller banks and banks become systemically too big to fail and there's a systemic risk event. And so we need to bail out the system with a central bank digital currency, and a central bank digital currency will then make it illegal to trade Bitcoin into CBDC. And global governments all around the world will coordinate and eliminate Bitcoin. That will be the next narrative in the next cycle. And then the next cycle after that will be, well, artificial intelligence is disrupting central banks and central bank digital currencies. And artificial intelligence can invent a quantum computer that can break the SHA-256 algorithm in cryptography. And therefore that will take down Bitcoin and the whole world ends and we all need to buy gold. Will be the next narrative after that. And it turns out that actually decentralized proof of work with a high level of security was actually the solution to the bank issue, people owning their own money, regulatory issue, the fiat issue, creating more honest central bank digital currencies by having competition where people can exit when your CBDC gets too suppressive. It was also the solution to artificial intelligence becoming more intelligent than central bankers, because you actually needed proof of work blockchain in order to combat. So each cycle you get a new narrative, and it just turns out that the whole thing that underpinned was what was proven in the first cycle, which was, can you create proof of work that means that no government, no authority, no coder, no group of companies trying to take over the blockchain, no influential VC investor, none of them could change the fact that we don't need to trust Bitcoin, and we do need to trust authorities, companies, exchanges, and every single cycle just gives us a new lesson, and new people discover I need to allocate more of my money to Bitcoin. And
yeah,
I
and I
think
would
that's
even
the story.
argue, I would even argue that less than it's about people understanding that they need to allocate to Bitcoin. What we're seeing right now is that wholesale crisis of confidence that you hinted to in the legacy system. So it's just, I think Bitcoin may get the benefit of a major pushback against all of these legacy systems that people don't trust anymore, right? People are failing to trust the bank. Certainly, they're trusting the government less. I mean, listen, we can keep talking about Bitcoin. It might be worth talking about the Restrict Act, because obviously that is a massive violation potentially of our privacy and overreach by the government. And I think something like that also pushes more people towards Bitcoin. Mark, I know Mark Moss, if you're there, I know we even spoke yesterday on a different show, but and I know that you're sort of that same opinion. I mean, what do you make right now of the massive sort of uptick in, I mean, enforcement against crypto, but general push towards violating privacy and such that we're seeing from the government?
Yeah, thanks, Scott. I think that was great what Simon said. What a great recap of all the different attack vectors going off of historical halving cycles. And so, yeah, that just continues. And, kind of what I was hearing with Brad and Dave and Simon as well. And I just kind of think back to, this old kind of investing adage that I've always kind of lived off of is volatility is the difference between perception and reality. And so we kind of get these overhyped cycles where everybody thinks it's the hot thing, it's going to take over the whole world, and it gets way overbought, and then reality kind of comes crashing back down. It gets oversold, and so this perception and reality, then it's going to die. Then it's at 16,000, it's going to drop to 12,000, and so the perception swings to these extremes, but reality keeps moving it forward. But the other thing I'd say is a couple things that, just to kind of recap on a few speakers and answer what you said, Scott. A couple things just to recap is I love what Dave said about trust. I think you can't really overstate that enough. That was a big point that I made at the Bitcoin conference last year, because it was right after kind of the whole Russia-Ukraine thing broke out. Russia had their bank account seized, et cetera. And once you destroy trust, any of us know that if we've had bad experiences with a spouse or boyfriend, girlfriend, or business partner, once trust is broken, it doesn't just come back. And typically it never comes back all the way. And so really what we're seeing is a dissolution of trust in the financial system. And not just from, the usual suspects like not trusting China, et cetera, but, now the United States, which was supposed to be kind of the leader of the world with rule of law, due process, things like that. And so that's why, a lot of capital comes to America because of those strong things. But now the trust is lost there. And for all the talk of, going to Chinese yuan, et cetera, there's no trust there either. And so as the world continues to decentralize, that trust continues to get dissolved. And it's almost like you need a trustless system to move forward. And so I think that's apparent. The other thing I just want to say is, we haven't seen it in this macro environment, but I think that's a very US-centric viewpoint. Typically, most of us humans don't really move until pain is high enough. I believe in chiropractic. I've gone to chiropractic most of my life. I think we should all do it, but I still don't typically go until my back really hurts, right? And so the pain has to be high enough. And so, when you live in Manhattan and you drink a $20 martini at the bar, you don't really care why your money doesn't work. But if you live in, if you're one of 3 billion people living under really harsh authoritarian regimes with, double, triple digit inflation, Lebanon, Turkey, Argentina, Peru, et cetera, you don't need to be told why you need something. So in the US, everyone's like, how do we orange pill people? Like, you don't need to orange pill those people. They're looking for an alternative. And so it's easily found there. And unfortunately, that's the direction the whole world is going into. More authoritarianism from everywhere. And the reason why the authoritarianism is on the rise is, that's just the natural order of the state. But, as things continue to deteriorate, as the financial system continues to break down, we're at the end of this, 100-year sovereign debt bubble that's bursting right now. They have to try to impose capital controls. It's always the last piece that a nation state would try to use to try to maintain order. Don't let the capital flee. So they have to seal off the exits and keep that in. And so back to the question that you asked, Scott, the Restrict Act, a lot of people, the media makes it out to be this TikTok ban, which is what it was intended for. But it's also, it's way more scary than that. And ultimately, a lot of people say it's about cryptocurrency, which it is. But it's even bigger than that. And so really what it is that they being the government, wants to have one unelected leader having unilateral control with zero due process or accountability, not even subject to FOIA requests or anything, to have full control to say what electronic communication methods are allowed to be used or not. And when we talk about communication, obviously that falls into cryptocurrency. So, similar to what we've seen with Tornado Cash, but they could say any of these communication protocols aren't acceptable. They're no longer legally able to be used. And then if you try to go around them with a VPN or something like that, you'd be found without even due process. They could just say you're guilty, you lose your property, 20 years in prison, $1 million fine, et cetera. But as much as it is an attack on crypto, I think it's even worse than that. And that is, it's an attack on really free speech. And so,
exactly.
Yeah, the government, they have to control the narrative, but they can no longer control the narrative. All over the news right now is the Department of Defense leaked all this top secret information. It's all out there. They're now going on to these news outlets saying, hey, stop talking about this, stop talking about it. But they've lost the narrative, right? They've lost control. And so we have the Joe Rogans of the world that are, way more influential than CNN is anymore. So they can't control that narrative. And so in a war of information, The only way to win that war is to control the information. But the internet's taken that away. We have open monetary protocols with Bitcoin, open communication protocols. The internet's mostly decentralized, and now with the rise of Nostr, things like that. And so if they can't control it, if they can't stop it, then the only thing they can do is threaten you to kill you, right? A monopoly on violence. And so that's really where this Restrict Act is coming in, to kind of the point that Simon was talking about. This is going to be the next attack vector. But I think going back to like a global viewpoint, taking out your just US centric viewpoint from a global standpoint, the rest of the world doesn't care, man. They need something like Bitcoin, and it's going to continue to see demand. The more they try to restrict act, the more they try to censor, the more they try to control, the more they try to do capital controls, the more demand will be back to the pain rising high enough.
I couldn't agree more. Jack, you haven't spoken yet. You're the only one up here. I don't know if you have any particular thoughts there. Maybe he's not with us at the moment. So anyone else have any? Dave, I see you opening your mic. Go ahead.
Yeah, I mean, I think that there's some incredibly good points that just got made, and I just wanted to say three things. First, on the narrative side, everyone in Bitcoin loves the the first they ignore you, then they laugh at you, then they fight you, then you win. We get that. What people always forget is the then they fight you phase has a couple of phases to it. I mean, it is the having to come out, listen to the arguments, they have some quality, etc. And then eventually you start hearing retreads and things getting more and more shrill and more hysterical. As my mentor from college, Dr. Zarefsky at Northwestern used to say, when people start resorting to increased volume and increased numbers of arguments as opposed to high quality arguments, they know they're losing. And we're seeing that. The New York Times piece yesterday was like ridiculous in so many different ways in terms of lack of data, et cetera. We're seeing that constantly. The anti-crypto army and starting a pack. I mean, that shrieks of desperation. They understand what's at stake. The fact is that there's two things that are going on, and everything that we've talked about. The first is from pricing perspective. A lot of your users want, a lot of your listeners want to talk about price predictions. Well, the important thing about Bitcoin is it's still so small that effectively it trades like an option on its future adoption. And you've talked about a couple of things that are very important. If we really believe that the zero outcome is completely gone, and I actually do, but a lot of people don't. If you think that tail is chopped off, then by definition, the entire value curve of Bitcoin, where you look towards digital gold and you look towards, potential hyper Bitcoinization, you understand what the upside could be. Sorry, there's work people outside my office and I have my dog here, so sorry about the barking. But it does increase the valuation and makes me more bullish. The other big thing.
Still there?
Yep. Yeah, I'm still here. Sorry.
No problem.
The other big thing that's going on is there's real risk to the United States right now, and people don't like to appreciate this, but the fact is the comment that just got made that the world doesn't care is clearly true, and it's also true that the U.S. has gained enormous standard of living benefits by having financial market primacy. Now, when I talk about that, I don't mean it because we're the biggest and the best and whatever. I mean because U.S. capital markets have been the most efficient capital markets in the world for decades. And when you're the most efficient, it means more companies come here to raise money. It means it's more investable. It means jobs. If the digital asset revolution does what I expect it to do and the U.S. doesn't participate, we're screwed. And all of those decades of gains from having financial market primacy could go away. That's the real risk. And that's what's going on here. It's like if the rest of the world embraces Bitcoin, embraces DeFi, embraces many of the things that are going on, we lose. And people always need to worry about that. And at the end of the day, I think that cooler heads will prevail and it will get realized. I just don't know if it'll, when. That's obviously the big problem.
Yeah, I think the reacting should be deeply concerning as either an American or non-American. And I'll bring it back to the quote that I often give Scott, is that every day America's looking more like China and China's looking more like America. And I think they're going to meet somewhere in the middle with a central bank digital currency.
I love it. I could hear you say that 100 times.
And the React is certainly an indication of that. Restrict React, restrict. I don't think it's an attack on Bitcoin. Maybe I could be ignorant. I think it certainly is an attack on crypto. But if you can make that distinction, I think the US maybe has either I'm completely ignorant and the US is just going to control crypto, launch CBDC, and then come after Bitcoin and claim it's no longer a commodity or something. But I don't see that happening. I think if that was going to happen, it would have happened. But I always look for the events which I can't quite predict or forecast. But yeah, it's a major concern. It's an extension of the Patriot Act. It is a major fundamental shift. And even if you see, I've always, from culturally taking a step back, when I spent a lot of time in China, I saw a very capitalist economy at the regional level. And I saw like Shenzhen grow and Hong Kong, which I know is a special region, but I lived in Hong Kong and spent quite a lot of time in China. And I just saw the level of innovation that came from the capitalism. But once a company became a tech giant, it became part of the government. In America, it's kind of the opposite, that you have the ability to become a tech giant or a billionaire, but then you get to control the government once you get there. And so I think it's pretty interesting that you're seeing even the leaders like Elon Musk wanted to take a step back on AI and try and pause that. That type of thing, combined with the types of policies that are coming, that would be a massive movement to America looking more like China, and losing the race. And I think that's a really real thought. On top of all the de-dollarization.
Yeah. Mark Yusko, I saw. Thank you. I'm glad you were able to join.
Hey guys,
You must have
sorry I
heard
was
Dave
driving, didn't have
Weisberger.
good connection.
Jack, 1 second.
Right, the point.
Jack,
the same
1
point I
second.
wanted to discuss specifically.
Scott's talking, Jack. I don't think you can hear him. You might want to come back and go down and come back up.
Yeah, Jack's muted. I had a chance earlier. Mark Yusko, if you can hear me, hopefully you guys can hear me. You must have heard Dave Weisberger invoke you earlier because he mentioned you and that you magically appeared. But I know you have a lot of thoughts on what Simon just said. You've had some takes on the Restrict Act and Patriot Act and how sort of out front and obvious it is what they're doing now. I would love your take here.
Look, I think it's called Restrict for a reason. It's I joked that, look, when W was proximate to the Cheney presidency, he at least was, patriotic enough to hide the negative intent of what the Patriot Act really was, a surveillance act on citizens, without rule of law applying, to call it the Patriot Act. Oh, we're patriotic because we give up our rights in the name of this war on terror, which was never a war in the first place. Now we've got something much more serious that people just don't seem to be paying attention to. The idea that you can be jailed for the possession, not even the use of, just the possession of a quote unquote banned app with no due process is really, it's Orwellian in the worst form. And I don't really think this bill is going to pass in its current form, but the fact that someone actually wrote it is frightening. And if you're not terrified by this, you're just not paying attention. So, but look, I love Simon and I agree with most of what he said. The reason I gave him a thumbs down was I actually think they are coming after Bitcoin. I just think it's hard to come after a decentralized network, a global network. Bitcoin doesn't give a shit if the US bans it. didn't give a shit if China banned it, doesn't give a shit if Iceland bans it. It is a decentralized network that is not reliant or dependent on any one nation state, regardless of what that nation state believes is its influence in the world. I agree that we are making critical errors because the people who are in charge are not the idiot politicians, but the even more idiot billionaire class, the WEF class, that has had a plan since their formation in 1971. This goes all the way back to 1971. This has been a long time coming that they wrest control through cross ownership of all the assets. Just pull up the Bilderberg chart sometime. And now they've got a competitor in the sense that a truly decentralized monetary network that allows us to move value out of the corrupt system, which has been stealing our wealth since 1913. I mean, look at every chart from 1776 to 1913. A dollar's worth a dollar, a pound was worth a pound. Everything was stable. And since 1913, everything's down 99 point something percent. Why? Well, that was the plan. It's not, like I said, they used to hide it behind fancy words. Now it's just right out there in plain sight. And CBDCs, I love the point I think Dave made that we're coming to the same place. And people say we're becoming China, China's becoming us. China is the most capitalistic nation on the planet, full stop. The whole fear of the CCP is nonsense. They are capitalists. They have a 30-year plan to be the superpower. The capital T, capital H, capital E. That is their plan. They believe in the mandate from heaven. They believe in Confucianism. For 1800 of the last 2,000 years, they have been the most powerful superpower in the world. They had a 200-year experiment with Marxist philosophy that failed, and now they're back to Confucianism. They will achieve that goal. And we're playing catch up on CBDC and surveillance and 15-minute cities. I mean, some of the most dystopian, crazy nonsense bullshit I've ever seen, and people are eating it up like it's candy. Anyway, I don't feel strongly about any of that, so thanks for having me.
Okay, go ahead, Brad. Or Mark, either one of you guys. Go ahead, Brad, and then Mark.
Yeah, no, I just wanted to kind of put something out there that the way I feel about all of this, Scott. I feel like that there's a real strong bias by a lot of people that invest in crypto companies and DeFi and stuff like that. I can clearly see that you guys really get Bitcoin and you understand the value of Bitcoin and the importance of Bitcoin, but it seems like there's not been capitulation on any of the flawed logic that led to the bubble of the 2021-2022 crypto, Ponzi palooza that we saw. And the explosion and all the rehyponzification and all that stuff that was promoted as financial innovation.
Did you say rehyponzification?
I did, yeah. That was the financial innovation of DeFi, rehyponzification.
Yeah,
Okay,
but
I've never heard
and Brad, you and I should
I made that one up. I made that one up.
we should debate this because the backlash against rehypothecation and fractional reserve banking, I think is entirely misplaced. In the absence of it, there is no growth. And
But that's why I said rehyponzification, because
okay, that's fair.
rehypothecation by itself is not necessarily bad, but this is something also that Bitcoiners talk about. You can't have, some Bitcoiners think you can't have debt in a hyper Bitcoinized world because Bitcoin is money. So in a hyper Bitcoinized world, there will be no fractional
The distinction
reserve,
to
there will be
make
no
is
credit expansion.
in the existing monetary system, and I did actually write a book on this in 2011. The governments will transition from debt-based money to debt-free money, which is CBDCs. But people, because money creation is combined with the process of issuing loans, people think you have to have credit creation in order to have money, which is true in a fractional reserve banking system. But even in the crypto space, let's call it even DeFi, which was an iteration on top of peer-to-peer lending, which was a 2006 innovation before Bitcoin. As long as there is sufficient money in a system, you don't need banks to create money. Banks creating money is simply a free market way of determining the money supply by creating money every time a bank wants to issue a loan, and it gives a super subsidy to the private banking sector because they benefit from all the interest off the money creation, but it also creates systemic risk. But you can still have a money supply which is less free market, and I'm not advocating for this, and still have all of the lending without combining the process of creating money and issuing loans. And that's not necessarily that debt is bad. It's combining debt at the same time as issuing a loan that creates the fractional reserve system. And that was simply because it was really a way of mining fiat currency into existence based upon the demands of a debt-based system and Keynesian like stimulus. But you can still have
No, but
debt
Simon,
without
hold on.
combining.
Simon, I think this is maybe the most important point. I'm prone to hyperbole, so I will super hyperbolize here. I think this is the most important point of all points that gets argued on Twitter and in spaces. This is to me the point, right? Which is, look, gold is money. Money is an asset that exists in the absence of a liability. Therefore, gold has been chosen for 5,000 years to be that. All of the rest is not money, it's currency. Everything else that's built on top of gold sits in central vault banks around the central bank vaults around the world, and all of the other currency is backed by debt. So in the absence of banks and fractional reserve creating that currency and that lubrication for trade, help me understand how we don't go back to the dark ages if all you want to do is turn physical gold into digital gold, and everybody turns their value into Bitcoin, and then we put it on a ledger and we bear it in our backyard. We're fucked, right? We have that. It's called gold.
Yeah. So if you had a central bank that creates the money supply and you only had one money supply called M rather than M0, M1, M2, M3, M4, and no one earned the money supply and having to use open market operations and manipulate the interest rate in order to control how much debt is created in the system, then you can still have a money supply that reacts to inflation and deflation, which is why I think a CBDC is inevitable. Don't like it. It's one of the biggest infringements upon life, liberty, and freedom, and a radical shift in the way that. But you can still take away the ability for banks to create money, replace it with a central bank digital currency. You could even let banks go bust if they take too much risk, give everyone an app to download the wallet, and just have technology performing the function of banking. But you would still need that would create currency, and currency you don't know the supply, and so therefore it would be manipulated by central banks a lot easier and probably a lot more stable and a lot easier to place blame rather than having all these systemic risks in the system. The fractional reserve banking, I describe it as a free market way of money creation by combining debt to issue the supply of
But
new
isn't that
digital
superior,
currency.
Simon, to a government controlled money supply?
I think so, but the problem is that you end up in a system with more debt than money, and so someone always needs to take on the new debt, and so you find a new Ponzi scheme in order to supplement. So you get individuals in debt. Then when they're all maxed out on their credit cards, you get corporations in debt. When they're all maxed out, you get governments in debt, and when they can't keep the system alive, you put it on the central bank's balance sheet, and then they deleverage the system by wiping out
Yeah,
the
the
debt
Jubilee.
and
Absolutely. They
creating the
just
currency.
Jubilee. We're in 1840 London.
So let me read this little piece from the Bitcoin Talk forums that Hal Finney wrote back in 2010 talking about this specific issue. This is what I always come back to when we get into these debates about a fractional reserve or not. And it's 100% accurate what Simon was saying. We don't really, it's not fractional reserve banking that's the problem when you really dig into it. It's fictional reserve banking. The money itself is the problem, and they've bastardized the whole fractional reserve system and the Keynesian economic policies because they've just taken the worst parts of everything and combined it together. And then that's why where I was getting to is what all of these DeFi companies and crypto companies have done is they've taken the worst parts of that and then put that on blockchains and called it financial innovation. And really, it's like things that blew up in previous bubbles and historical cycles, things that were way too leveraged and over leveraged and toxic and derivative. They've just found a way to make money with that by adding tokens and yield to it, token mining, and put that on blockchains and called it financial innovation. And I think we do a huge disservice to Bitcoin and financial literacy and global like wealth inequality when we lump Bitcoin in with crypto. And we've kind of created the problem where Elizabeth Warren is now building an anti-crypto army because, yeah, like you guys were talking about earlier, Scott, with the progressives, why would a progressive be against this? Elizabeth Warren was part of the group that was, bailing out Wall Street on, not on her, like she didn't want to do it, but it was going to blow up the financial system. She was in charge of administering TARP. And then she created later on, she was tried to be tough on Wall Street banks with like tough regulations. And it all comes from a place of financial literacy and wealth inequality. So like the progressives don't want to see big corporations and too big to fail banks just treating people like profit meat and just leeching value from society without contributing anything of real value back. And that's what crypto's turned into. Crypto has just taken all the worst parts of what Elizabeth Warren had to deal with in the collapse of the banking system in 2008 and put it on blockchains. And now it's kind of it has been spilling over into the traditional financial system. So it's no like shock that she would be against crypto. And unfortunately, Bitcoin gets lumped into that. But let me just read this thing from Hal Finney. He says on Bitcoin banks, actually, there is a very good reason for Bitcoin-backed banks to exist, issuing their own digital cash currency, redeemable for Bitcoins. Bitcoin itself cannot scale to have every single financial transaction in the world be broadcast to everyone and included in a blockchain. There needs to be a secondary level of payment systems, which is lighter weight and more efficient. Likewise, the time needed for Bitcoin transactions to finalize will be impractical for medium and large value purchases. Bitcoin-backed banks will solve these problems. They can work like banks did before nationalization of currency. Different banks can have different policies, some more aggressive, some more conservative. Some would be fractional reserve, while others may be 100% Bitcoin-backed. Interest rates may vary. Cash from some banks may trade at a discount to that from others. George Selgin has worked out the theory of competitive free banking in detail, and he argues that such a system would be stable, inflation-resistant, and self-regulating. I believe this will be the ultimate fate of Bitcoin, to be the high-powered money that serves as a reserve currency for banks that issue their own digital cash. Most Bitcoin transactions will occur between banks to settle net transfers. Bitcoin transactions by private individuals will be rare as well as Bitcoin-based purchases are today. So, I mean, that was just an interesting thing to hear from Hal Finney, who many people consider to be one of the people that could be Satoshi.
Well,
Man,
100%. And I think he's right about 90+% of it. I think the issue is we actually know how the free banking era worked out. It's not pretty. You need a lender of last resort. What you don't need is the fictionalized need for inflation and a inflationary money supply. That's the problem. But the free banking era in the 1860s was a unmitigated disaster and nightmare, and it was precisely because everybody did issue their own currency, from companies to states to even small groups. So
Sounds like coin market cap.
yeah, and really what
That's funny. While I was reading that, I was like, you know what? Like all these blockchain layers and all this stuff, they're kind of like banks that
Yeah.
fractionally reserved their Bitcoin treasury
No, no.
and done credit expansion into the crypto
Exactly.
ecosystem.
And what if you think about it, right? Gold is money. We can all agree that gold is money, right? It's the only asset in the world that exists in the absence of a liability. That's easy. Gold is the base layer, and what Hal's talking about is gold functions as the base layer of money. We don't we don't transact in gold. We don't Banks don't transact in gold. They accumulate gold by trading it for paper. And there's the great picture of, the Chinese throwing paper across the bridge, and Americans throwing gold back at them, and we know who wins that. But the key is that we created these layers on top of that, right? There's Fedwire, there's ACH, there's Visa, the Visa network, right? Most of us transact using a little plastic card. Well, how often does that interact with the main chain? Once a month. Once a month, it interacts with Fedwire, and money is transferred from the bank to Visa, and you settle up. The rest of it's just stored on a COBOL-based mainframe computer, which is frightening to think. But it's those layers, and Bitcoin as a base layer of money, great, awesome. Replaces gold, is lighter weight, is more efficient. I quote Hal all the time on that. But what has to happen on top of it is fractional reserve lending to create credit and demand and growth. And I ask this question all the time. I go into spaces, and everybody, I mean, maybe not everybody, but everybody I know has some portion of their wealth in Bitcoin or other stores of value. Some have gold, some have whatever, but a whole bunch of their money's in the bank. Okay. So, and they're like, no, well, yeah, it is. Okay. So you've given up your rights to that money by putting it in the bank, but we all do it. Okay, fine. Name a country that you would go live in today that either does not have or has a poorly formed fractional reserve banking system. I'll wait all day.
Yeah, so Mark, that's why I'd say this is such an interesting conversation and gets to the core of it, and that's why I'm so grateful Bitcoin came around, because it gave everyone a framework to actually have these conversations that was so hard to have before Bitcoin. But probably, gold people had these conversations. But that's where I think who is going to create money is the question. And fiat currency, sorry, let's not call it money. You make the important distinction that money you can own is not somebody else's liability. So you've got gold and you've got Bitcoin, which are the traditional and the neo exit from the financial system. Bitcoin, easier to custody, and all the reasons why we're here and discussing it, and more auditable. But the real conversation about who creates money is simply a central bank versus a bank. The current system is that the money supply is determined based upon the central bank trying to manipulate how much money a bank creates and filling it with quantitative easing when the system breaks. The new system, which I believe to be a central bank digital currency, which, by the way, I'm not an advocate for, I just think it's inevitable, predictable, and guaranteed, is that the central bank creates the money, not backed by a debt, but just simply based upon a simple money supply of how much money with more transparent inflation, deflation targeting, and take away banks' ability to create money, because it always ends up with the central bank having to bail out the system because of the Ponzi economics of having more debt than money. And the problem of having more debt than money is a Ponzi scheme. And so it always has to end the same way, which is why every fiat currency has to go through the cyclical nature. And I think the US is at that point. So it's just a question of freedom versus, and I do agree, fractional reserve banking is creating money based upon how much people want to borrow. And therefore it's more free market than a central bank creating money based upon a transparent money supply, but not backed by debt. But you deleverage the system, and then everyone can operate a peer-to-peer lending fiat currency, and you can even have if you still, inevitably the rules just break and you end up with fractional reserve anyway. So it's almost like an impossible problem to solve.
So I think the conclusion is buy Bitcoin. And on that note, guys, I do have to go record a podcast. So that means that this space is unfortunately has to come to an end. I appreciate all of you. These things are such winding and long conversations. It's so incredible where we started with Mike Novogratz and Chris Giancarlo, of course, and ended with this incredible conversation